Hey everyone, welcome back to our channel. Today we're tackling a hot topic. Should you buy Amazon AMZN stock at $205? In today's market, this price might seem like a golden opportunity, but it's also a bit volatile. Stick around to find out if this dip is the perfect entry point for long-term growth. In this video, we're breaking down every key factor, from fundamental analysis and revenue growth to valuation compared to the S&P 500 and Amazon's resilience during downturns. We're keeping things simple and using proven psychology techniques so you remember exactly what matters when making your decision. If you enjoy these deep dives and want to master investing strategies, hit that subscribe button and click the bell icon. Now let's get started. In today's video, we'll cover 5 main topics. 1. Market and event context. What caused the recent 3% decline and the impact of tariffs on AMZN and the broader market. 2. Fundamental analysis. A deep dive into Amazon's financials and key valuation metrics versus the S&P 500. 3. Revenue and growth trends. How Amazon's top-line growth over recent years compares to market benchmarks. 4. Profitability and financial stability, reviewing operating income, cash flow, and balance sheet strength. 5. Downturn resilience and long-term outlook. How Amazon performs in market crashes and why its current valuation, despite being high, might still offer upside. Stay tuned as we explain each of these segments step by step, so even if you're new to investing, you'll walk away with clear insights. Before we dive deeper, here's a quick question. What's your take on buying stocks during market dips? Drop a comment below with your thoughts or even your personal strategies. I've also added timestamps in the description for each topic, so you can easily navigate to the section you find most interesting. Your engagement helps us understand what you care about most. Recently, Amazon's stock fell over 3% amid broader market downturns, partly triggered by President Trump's tariff confirmation. The Dow dropped 1.8%, and the S&P 500 fell 2.1%, marking the worst day of the year so far. This created volatility, but at $205, AMZN might look attractive for long-term investors. We'll compare Amazon's current valuation with its operating performance over the recent years. Despite a high valuation, when you look at its PS ratio, P/EBIT, and PE ratio, the company's growth, profitability, and financial stability are strong. This video will help you understand how to balance these factors using both numbers and market sentiment. It's important to remember that investing isn't just about numbers, it's also about mindset. Emotions like fear and greed can drive market moves. We'll show you how to separate the noise from the data, so you make decisions based on informed confidence. Let's start with the current market conditions. On March 3rd, amid a broader Wall Street downturn triggered by tariff news, Amazon stock fell over 3%. This kind of volatility is common during political and economic uncertainty. Understanding these external factors is crucial. Even if the market experiences a temporary sell-off, it doesn't necessarily mean a company's long-term potential is in jeopardy. It's about identifying opportunities when the fundamentals remain strong. Next, we examine Amazon's financial metrics. When comparing Amazon's valuation to the S&P 500, we see it's expensive on a price-to-sales and price-to-operating income basis, but its PE ratio is relatively comparable. These ratios tell us that while investors are paying a premium, they're doing so for Amazon's growth potential. Remember, a high valuation can be justified if the company consistently delivers strong performance. Amazon has been growing impressively. Over the last 3 years, its revenues have increased at an average rate of 14.3%, significantly outpacing the S&P 500's 9.8% growth rate. Just in the last 12 months, revenues jumped from $554 billion to $620 billion. This strong revenue growth demonstrates Amazon's ability to innovate and capture market share. Even during downturns, such consistent performance can indicate a resilient business model. Moving on to profitability, Amazon's operating income is solid, though its operating margin is a bit lower compared to the S&P 500. However, its operating cash flow is very robust, signaling a healthy cash conversion cycle. Furthermore, Amazon's balance sheet is strong, with a low debt-to-equity ratio of 5.4% and ample cash reserves. These factors contribute to the company's financial stability, even when market sentiment is shaky. From a psychological perspective, knowing that a company has a solid financial foundation can help ease the anxiety that often comes with market volatility. Finally, let's talk about resilience. Historical data shows that Amazon has weathered previous market downturns better than many peers, bouncing back from market crashes with strong recovery trends. Our analysis suggests that while the current dip might seem alarming, the underlying strength of Amazon, its growth potential and sound financials, could lead to substantial long-term gains. Investors looking for stability may even consider a diversified, high-quality portfolio to mitigate risk. Think of it this way: buying during a dip isn't about chasing a quick profit. It's about investing in a company that has proven its ability to overcome challenges over time. That's where the long-term value lies. To sum up, while Amazon stock at $205 might seem volatile, the strong fundamentals, impressive revenue growth, and solid financial health provide a compelling case for long-term investment. Remember, investing is as much about managing emotions as it is about crunching numbers. By understanding the context and focusing on the fundamentals, you can make smarter decisions even in turbulent times. If you found this deep dive helpful, please hit the like button, subscribe for more investment insights, and share your thoughts in the comments below. What's your take on buying AMZN at $205? Thank you for watching, and remember, informed investing is the key to long-term success.